This is a lecture from Open Tuition. To benefit from the lecture, you should download the free lecture notes from opentuition.com.
So we've just gone through, haven't we? And look, they're coming down the stairs, but we hadn't crossed the accounting boundary. Now we're going to go through and cross the accounting boundary. We're going to rocket through that door on the 50th step, past the accounting boundary and leave the world of consolidation behind us. So wave goodbye to it. Don't get too upset. We've still got plenty of group accounts still to work through in the other chapters. But the issue that we're going to go through and look at here is that if we're no longer consolidating, what do we do? Okay, well, consolidation was all about substance, wasn't it? And we're still going to look at things from a substance perspective, because in substance, what we have done is we have disposed of the subsidiary and we've disposed of the assets, the liabilities, we've got rid of the goodwill, and there's therefore no non-controlling interest. So what we're going to go through and do is we're going to work out a profit or loss on disposal. But the key bit is that you have a group profit or loss on disposal. And when we talk about a group profit or loss on disposal, we're looking there at the economic reality, which to you or I is referred to in the accounting world as looking at it from a substance perspective. Okay, so it's something that you need to learn, commit it to memory, add it to your list of standardized workings if you so wish. What you have there is you need to go through there and look at the entire worth of the subsidiary that you are disposing. So you need to look at the proceeds, you need to look at the investment that you still hold, because don't forget, you may not have a full disposal, taking it down to zero. You might go through the accounting boundary and not make it to step zero and stop partway down. Okay, if you're valuing the entire subsidiary, you need to look at what you've disposed of and then what still hasn't been disposed of, because don't forget, in substance we are disposing of the subsidiary. Okay, we're not looking at the legal aspect and the fact that we've just disposed of a small amount of shares. Okay, so you take your proceeds, you add on the investment that you still hold. Again, key bit there is to ensure that that is in there at fair value. And don't forget as well that there is now no longer any non-controlling interest. So you need to add in the non-controlling interest to get the full worth of the subsidiary. Okay, to value it 100%. From that, you will then go through there and deduct the net assets at disposal, and then you will then deduct the goodwill on disposal. Okay. And it just gets a little bit funky, doesn't it? Because if you think about it, we're working out a profit or loss on disposal. So it's more geared, isn't it, towards a statement of profit or loss question. But when you're throwing in a goodwill aspect to it, that's a bit SFP side, isn't it, of the argument. So it gets quite tricky because students get confused and find it difficult to work out a profit or loss, which is very much profit or loss focused, and then have to divert your attention to calculating goodwill, which you usually see on the SFP, but that goodwill is then used within your group profit or loss calculation. So it wrecks the head a little bit. Okay, gets you a little bit confused, but over time you will become better at it. Okay, so what have we got? It says there in the example, calculate the group profit on disposal. So based on substance that will appear in the group financial statements of SOX for the year ended, is it there, December 2015. So what you've got is it says SOX owned 90% of MOGS before it decided to sell a 50% stake on the 31st of December. So you're selling a 50% stake. So you're going to get proceeds for that 50%, aren't we? So that's there as 120 million. Okay. The non-controlling interest, if we own 90, would have been 10, wouldn't it? And if we've got rid of 50 of our 90, then does that mean that we have 40 left, doesn't it? And again, what you can see there is that we value the subsidiary in its entirety. Okay. The non-controlling interest at that date was 53. The fair value of the remaining 40% is there as 96. So make sure, again, what you still hold is at fair value. And then the goodwill on acquisition of the original 90 was there at 38. And the net assets at the date of disposal were 201. Again, they've been given to us in the exam. You may have to go through and calculate it, but we shall worry about that as and when we encounter it. Totaling that up, that gives you there, is it 30 million? Okay, a long time ago now, that was actually a very small part of a group's question, and it just specifically said as a part A to calculate the group profit or loss on disposal. Admittedly, I think you had to calculate your goodwill, but it was worth about 6 marks. Okay, yeah, wouldn't mind that for 6 marks within any exam, would you? So learn the pro forma. As I said, it will get a little bit more complicated. There are some little tricks that the examiner has up their sleeve to try and make it more difficult. One of which could be to calculate the goodwill. The other one of which could be to work out the non-controlling interest. If that's the case, goodwill is working 3. Non-controlling interest is working 4. If the examiner was in a really nasty mood, they could get you to work out the net assets at disposal, which essentially is what you do in working number 2. Okay, but that's just there for background thought. The questions that we will see as we go along don't bring in too many complications, because I want you to understand the fundamental principles before we then move on to any bigger questions. So what I'd do is I'd go back and recap step acquisitions. I'd recap your step disposals, make some additional notes on them if you so wish, work some of the brief examples that would be there within the study text of your chosen tuition provider that you have bought. And then what we can do is we can rejoin, get ourselves back together, and then we can start working some longer form questions as we build up to your exam standard questions on revision.